Picture yourself on a couch right now. Your rent is due in 2 weeks. Your savings account has maybe enough for a small emergency. And every time you open a real estate app on your phone, you feel that same sinking feeling, like the whole system was designed before you arrived and nobody saved you a seat. That feeling is real. But here is something more real. Almost every person who has ever built a serious real estate portfolio started from exactly that spot. Not from wealth, from awareness. Welcome to Wealthy Worry. Today, we're walking through every level of the real estate investor journey, from literally zero, from a renter doing math that feels like a personal attack, all the way to controlling tens of millions of dollars in assets across multiple markets. And by the end of this, you're not just going to feel motivated, you're going to understand something. And those are two very different things, because motivation disappears by Tuesday, but understanding actually changes how you move. Level 1 is called the awakening, and it does not happen at a seminar. It happens in a quiet moment when you realize the way you have been thinking about property, your whole life has been completely backwards. Most people grow up learning that debt is dangerous, that a mortgage is a burden you carry, that owning a home is something you earn through decades of discipline and sacrifice. But there is a version of debt that works differently. When you buy a property and someone else pays the mortgage every single month through their rent, that debt is no longer a burden on you. It is an engine running on someone else's fuel. The second you see that clearly, your entire perspective shifts. You are not looking at a price tag anymore. You are looking at a vehicle. Level 2 is education before acquisition. And this is where most people either get serious or get distracted. You start studying like it actually matters to you, because now it does. You learn what a cap rate is. You learn what cash on cash return tells you about a deal versus what it does not tell you. You learn the difference between a polished property in a prime zip code with modest returns and a rougher asset in a transitional neighborhood, generating stronger cash flow. You are not ready to buy anything yet, but understanding is always the purchase that comes before the actual purchase. Level 3 is the first deal, and it is terrifying in a very specific way, not because of what you know, because of how final it feels. You find something off-market, maybe through someone you know, and the numbers actually work. A duplex, both units occupied, combined rent covering the mortgage with the room left over. You put down everything you have saved. Your account hits zero. You feel it in your chest. But here is what changes the moment you hand someone a key to an apartment you own. Every month, people you have never met are reducing your loan balance, building your equity, and handing you cash flow on top of it. You clear less than $500 a month after expenses. That is not life-changing money, but it is money being generated by an asset. And that distinction rewires how you think about work, time, and wealth. Level 4 is the operator phase. You manage the property yourself because at this scale, you cannot afford to give away 10% of your gross rents and survive. The appliance that breaks on a holiday. The tenant who pays late but always pays. The gutters, the water heater. These are not setbacks. They are your education. Every single one of them teaches you something that no book or course ever could. You are developing judgment. And judgment compounds just like equity does. Level 5 is the reposition. About 18 months in, your duplex has quietly appreciated. The neighborhood is shifting. A few businesses open nearby. Some infrastructure is moving in. You refinance and pull equity out. It feels uncomfortable, like spending money you did not earn. But you understand now that you are not spending it. You are repositioning it. You use those funds as a down payment on a second property, a single-family rental, and suddenly you have 3 units producing income. Your monthly cash flow nearly doubles. You are building a machine, and it runs whether you are thinking about it or not. Level 6 is when it becomes a business. You acquire a small apartment building, 5, 6, 8 units. Everything changes. The financing structure is different. The insurance conversations are different. The way lenders evaluate you is different. For the first time, you bring in a part-time property manager because your time has become a resource you have to manage. Below 5 units, you are a landlord. Above it, you are operating a business. That shift is not cosmetic. It determines how you scale, how you raise capital, and how seriously the financial world takes you going forward. Level 7 is when you start using other people's money. Not recklessly, intentionally. You spend months building a relationship with someone who has capital, but not the time or expertise to deploy it themselves. You show them your track record, your actual numbers. Not a pitch deck full of projections, but real results from real properties. They fund a portion of a larger acquisition. You become the general partner. This is where your reputation starts functioning as a financial instrument. The deals you can access, the terms you can negotiate, and the speed at which you can move all depend on how much trust you have accumulated in your market over time. Level 8 is tax strategy and structure. You now have a CPA who specializes in real estate. You are learning about depreciation and how the IRS allows you to write down the value of a residential rental over 27.5 years. You discover ways to accelerate that depreciation. You learn what a Schedule E means for your overall tax liability. Every dollar you save in taxes goes directly back into the portfolio. The machine is now feeding itself in ways most people never discover because they never got to this level. Level 9 is the crossing point. Your real estate income surpasses your salary. You do not announce it. You do not post about it. You tell one person at a dinner table, and then you start talking about capital allocation and leverage ratios and which properties to hold versus which ones have run their course. This is the conversation that matters. You execute a 1031 exchange on that first duplex, the one that started everything, and roll the proceeds directly into a larger acquisition in a market where rents have not yet caught up to fundamentals. You are buying time and real estate simultaneously. Level 10 is the empire. You are in your 40s. You hold hundreds of units across multiple markets. You have a full team. You sit in rooms with other principals whose collective holdings represent billions in assets. The conversations are short because everyone in the room has done the work. Brokers bring you opportunities before they go to market. Sellers choose your offer, not always because it is the highest, but because they know you close. That trust was not purchased. It was built one completed deal, one kept commitment, one honest conversation at a time over a decade. And here is what you need to understand about every single level of this journey. Nobody arrived at level 10 without passing through level 3. The terrifying, clarifying, account emptying, first deal level. The math does not get more favorable while you wait. The market is not pausing for anyone's savings account to catch up. Somewhere right now, there is someone looking at a property, listing late at night, talking themselves out of making a call. The machine does not run on confidence or inspiration. It runs on one specific, uncomfortable, irrevocable first decision. After that, someone else starts paying your mortgage. After that, the math starts running in your favor. And after that, the version of you at 51 with a portfolio that spans 9 markets and decades of compounding decisions starts to look less like a fantasy and more like the inevitable result of one phone call you almost did not make.